Hello traders, Mighty Fine back. It's October 15th. This is your weekly analysis. So quite a volatile and voluminous week last week. We had some big overshoots of major demand levels on the dollar, and then obviously correlating major supply levels on EURUSD, GU, AU, even Nasdaq and other equities. But I am pretty confident that the dollar will resume its bullish overall trend. And I think that we are going to lean bullish again into this new week. It may sound like I'm a perma bull, but the fact of the matter is it's a safe haven. There's a lot of geopolitical conflict, and what the Fed is doing has not been enough. And inflation kind of just is staying high. And so the DXY's value is obviously up there in correlation as well. So heading into this new week, pretty much have the analysis done for you already. We'll just give it a quick walkthrough. Last week we had a failure to follow through past that daily demand level. I had mentioned that if you don't get a bearish candle closure on the daily below this level, then I think it's going to resume its bullish pressure and come back to fill this range and retest these highs. That's exactly what happened. We had a huge volume rejection of that area. A little bit of an overshoot. Again, this is just the biggest players in the market engineering some liquidity and price point in their favor. So we get a bit of what retail would call an overshoot, but buyers have retained control of this area. So overall right now, this is your current flow leg that I have marked out here. Now, based on where we currently are, a couple of things can happen. Obviously, number one would be that we open up bullish this week and we just come all the way back up into these trend highs. If that's the case, you're simply just waiting for some sort of retracement in relation to the bullish push. You have a major breaker bounce situation here on the previous trend high, or the highest point that buyers achieved before this retracement secondary phase came into play. So that's scenario one. Scenario two would be just a pullback back here into this 4-hour demand that I have marked out for you here. I will label that as your 4-hour demand as well. So price could simply just come back into this and then transition and then start eking higher. That would be number one that you could take advantage of. Number two you could take advantage of would be a deeper pullback, a breakout of the 4-hour demand, and then a retracement relative to that push from sort of Wednesday night into Thursday morning towards the end of the week. This big flow leg that I have marked out here. So break below 4-hour demand, trade in relation to this. Again, major breaker bounce situation near the daily demand level. If we see a really like a 4-hour candle closure below this daily demand level, then I think the bearish play makes a lot more sense. But until then, I'm retaining my bullish stance and I'm waiting for some sort of flow or trend-based pullback here. We're going to take it into these highs or higher. Really nothing has changed, but if you go look at your calendar for the week, we do have some pretty big events throughout the week. Lots of Fed talk. We have, central bank minutes from Aussie to start off the week, and then we've got retail sales in the US on Tuesday, as well as some manufacturing sector data. We have 2 Fed speakers that day as well. Then leading into Wednesday, we have inflation rate data. US on Wednesday, we have building permits and housing data, right? It's a big one. We have Powell talking on Thursday. There's 7 Fed members talking on Thursday. We also have inflation rate data for Japan on Thursday, all that kind of stuff. If you're interested in what events really matter, again, join my Discord. I send out some stuff about, the macroeconomic calendar and a recap of the previous week. But what I'm trying to say is there's probably going to be quite a bit of volatility and speculation, particularly around the major impact data and every Fed member. Because right now, the world is sort of hanging on a thread, waiting for somebody to indicate what the next move is so investors can speculate and then, solidify their positions accordingly. I think personally that, for example, the US Fed is going to maintain what they've been saying, which is we are data-based until the data changes, we don't. And 2, we're going to keep rates higher for longer, which doesn't mean that they won't hike again, even if it's a small amount. So do keep that in mind. And, we saw that kind of fear start to trickle into the stock markets as well, with all of them really closing down for the week. So food for thought. Lots of stuff going on. It could create some volatility. It could create a big surge of volume, or even pockets of very little volatility and volume leading up to those events, because very often the market kind of grinds to a halt before these big speculative events. So just keep that in mind in terms of your timing and these key levels that I'm highlighting for you here. So if we're looking for some sort of trend and flow-based pullback to the downside and then a continuation to the upside in the dollar, that means we're looking for the opposite on our dollar-based pairs. We're looking for some sort of bullish retracement into a bearish continuation. And the areas that I would suggest that you watch now for EURUSD, it's going to be very similar for GU and AU as well, are the 4-hour supply for your initial pullback. If you get a pullback here, some sort of transition, look for a continuation. A little bit of a liquidity pocket here and here marked by the eyeball, but anything below the trend low is very bearish. I would not take a long position above my 4-hour supply towards daily supply. I would only look to take any sort of bullish positions above this area here, daily supply zone. So major breaker bounce situation here as well. If this doesn't hold and price retraces further, again, just look for a retracement relative to this entire flow leg that you have right here. And then most likely come up into one of these two little eyeball areas here, get your transition, take it short again, look for flow lows to be reattacked. Overall, bearish unless price gets above the daily supply. GBPUSD, very, very similar deal here. We have a little bit of a liquidity pool that is acting as a strong demand that I have marked out here. Interesting little bit, but overall has resumed its bearish H4 flow. We have an H4 break of flow here. Lots of volume coming into the markets to the downside as well. Look for a retrace either here or towards the daily supply, depending on how these two are treated. I don't think this is a major area, but there are some instances where big buying happened previously, and that's where the week ended, this big bearish run. This thing was absolutely free falling. I couldn't even take advantage of it in my intraday trading session with my students. It just wasn't a safe enough entry opportunity for me to feel comfortable because it was falling so fast. So just because it bounced off of this area, I don't think it means that buyers are assuming any sort of control because we have one bullish candle here. I think it's just where a little bit of profit taking happened because we're heading into a weekend and this thing absolutely fell out of the sky. So looking for bearish continuations either from the H4 supply or daily supply level here. Anything below these little buyer instances right here would be pretty bearish, and then anything below the trend low is obviously extremely bearish as well. Be careful of this buying area. Lots of money came in here. AUDUSD, one of the most voluminously bearish ones this last week. Huge push to the downside. Buyers didn't stand a chance. So as of right now, I would say you're really looking for a retracement again, similarly to the H4 supply or to this daily supply up here. There you go. Little bit of a pocket in here on lower time frames that you may want to consider as well for a potential pullback if you are an AU trader, but overall pointing down, looking for flow and trend retracements on all of these pairs. Last but not least, I'm going to do Nasdaq. We have a huge H4 break of flow. Again, overshoot here, very similar to that dollar, euro, GU, AU situation. This is your major zone right now, H4 supply. I have it from this body right here to this wick high here, area where sellers took control and extended it downwards. It did move into a bit of a buying pocket here, but overall, I would just be looking for some sort of retracement like this and a continuation to the downside. Then I would keep my eye on these little instances of major liquidity on the way down as just potential areas to take some partial profits off. So bearish continuations in theory, so long as the dollar, starts to do what I said it does in the first pair that we looked at. And that's about it. If you want to learn more about this style or what I do, my course is opening back up in the beginning of November. After a while, have had a lot of requests for that, so I'm opening it back up. I'm updating a bunch of content, and I'm opening the Discord as well to new members. So check that out. Link is down below for the free Discord where this analysis and trade breakdown ideas, blah, 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 those all get sent out there. A lot more content than I put on YouTube, so check it out. Until next week, be smart, be safe, and if you need anything, drop a comment below. Peace.